Vaibhav. In today's session of Market Movers, we will take a look on the dollar index, which is increasingly looking firm after finding support close to 92 zone. It is rebounding now almost close to the 93 level. So we will see if there are any emerging trading opportunities for us to exploit in today's session or maybe even in coming week. This is a weekend, the Friday. So for the weekend, we will be taking off and then we will be back on Monday. And let's hope things will turn out as per our anticipation. And of course, now we are back to the trading context for the day. Today is a lot of data. Starting from the Australia, we have got a lot of data coming in from the major economies of the world. Even for the European trading session, the data rocket is full. And later in the day, we have got the scheduled releases coming in from the Canada and then the United States as well. So today it's a lot of things coming up on the fundamental side. Earlier in the day, we got these CPI numbers for the Japan, and here, in a welcome development, the Japan's inflation rate has edged up to now 0.3% in terms of year on year for the month of July, and even in terms of month on month, there is a slight rise, slight increase to 0.2% compared to the prior reading of 0.1%. And the inflation is picking up as the demand is slightly higher compared to the prior month, but still, if we exclude the food items, the discretionary spending is a lot less compared to the pre-coronavirus days, and it will take a while, maybe a couple of quarters more, for the demand to get back and push the inflation rate to the comfortable level above zero. Moving on to the European trading session, we got the retail sales numbers for the United Kingdom. We will not go into the details of that, but from the preliminary reading, the retail sales are quite good and they are more than the anticipated level. So, at least the retail sales segment is holding up in the United Kingdom. Then we got the PMI. This is the flash estimate, the first estimate for the France and later on for the Germany and the Euro area as a whole. And here the PMI readings are kind of leveling off after a surprise uptake in the last month of July. Now for the month of August, we are back to the levels close to the 50 zone. So here the robust rebound in activity we saw in the month of July is now subsiding, and that is kind of expected given the fact that for the month of July we were coming up, most of the industries were getting online after having been shuttered for almost 2 to 3 months time, and now the economy is again kind of leveling off. But still, for most of these major economies, with the exception of France, we have both the manufacturing PMI as well as the services PMI above 50. That means that these activities are in the expansion phase. So that's a positive takeaway from these releases. Now, and also we also got the PMI numbers for the United Kingdom, and UK is an kind of exception here. UK is reporting the robust numbers, and here, if you consider the services PMI and the composite PMI, the reading is even above 60, which is quite good, and even for the manufacturing sector, the PMI is showing robust expansion at 55.3, and all the three key readings are above the expectations, and that is also being reflected in the strength which we are seeing in the GBP. Later in the day, we are scheduled to get these retail sales and the housing price index data for the Canada, and it will be followed by the market manufacturing PMI, services PMI, and the composite PMI. And also these are the flash estimates for the United States. And just like the major European economies, here also we are expecting the leveling off of the expansion in most of the industrial segments. So we are not really looking at strong expansion, just that we are expecting a reading close to the 50 zone, 51 or 52 maybe. Let's see how things unfold in the latter part of the day. Now let's turn our attention to the technical outlook. Here we will first see the dollar index and then we will move on to the Dow Jones Industrial Average. Let's start with the dollar index technical outlook. This is the daily time frame chart for the dollar index, and it has been consolidating closer to this 161.8% Fibonacci expansion of its prior fall. So almost 3 weeks now, the dollar index has been finding support closer to this 92 zone, and even in most part of this week, whenever the dollar index went close to this 92 zone, it has rebounded. Even in today's session, we are seeing buying on the lower side, and this kind of indicates that on the lower side there is support for the dollar index, and also given the fact that we have already seen extensive run on the dollar, some retracement shouldn't be ruled out, at least being dollar index has been in the oversold territory. So from that perspective as well, we can look for some upward momentum picking pace from the current level, and that's why we have decided to see if there are any buying opportunities for us. The pivot point series is still continuing to indicate the bearish phase of the dollar index, and of course we are a lot lower compared to the central pivot point, the deciding marker between the bearish and the bullish phase. And for the longer term trend to change, we will need the dollar index to cross and then sustain above this central pivot point. But as I said, we are not really looking at a strong rally. We are actually looking for the retracement move after dollar index having lost these points, and it has on the lower side consolidated well. So from that perspective, here we are looking at the scalping kind of opportunities with the dollar index, and to that extent the regression curve is also indicative of the changing fortune for the dollar index. It has flattened and now it has started to point upward, and I think we can take the clue here and see if there are any optimum levels for us to get involved. And even coming to the hourly chart, we get kind of similar picture, and I feel that this today's low can be the deciding factor, kind of marker for us to determine whether to go long or whether to sit on the sideline. So here I would say that as long as the dollar index is holding above this 50 SMA zone, and we can use this immediate swing low as an level close to the stop loss as well. So we in today's session should be looking at the possible entry points somewhere in the vicinity of 92.7 to 92.8, and on the lower side I think the stop loss anywhere close to 92.4 should serve us well. We have this resistance on the higher side as we saw in the yesterday's session as well, that dollar index wasn't really able to cross and sustain above this prior swing high as well as the 200 SMA zone, and from there on we saw this sell off and eventually the dollar index fell closer to the 92.5 zone, and now in today's session it is indeed finding the buying momentum, and we can bet on the possibility of dollar index rising above this 200 SMA and getting close to the this immediate swing high or even beyond that. So on the higher side, we are looking at the possibility of the dollar index looking past getting past this 93.5 zone, and for that entry point closer to 92.7 to 92.8 should be a good opportunity. and as I said, the stop loss can be somewhere close to 92.4. So for a risk of around 30 to 40 points, we will be targeting almost 70 to 80 points on the higher side, and it will give us the risk reward ratio of 1 is to 2, roughly speaking. So from the conservative trading setup as well, we have this opportunity coming our way, but of course right now the value is at 92.96, so we will need some correction from the current levels as well, and then only we will have the optimum risk reward ratio taking shape in the dollar index. Now moving on to the Dow Jones Industrial Average. The Dow Jones Industrial Average has been following well this GAN angle, and here for last two occasions it has rebounded well, and even in the last week of July we saw this reversal and then the continuation of the upward trajectory which the Dow Jones got which has brought the Dow Jones closer to 28,000 zone. And now in today's session, I think the Dow Jones stands at kind of crossways. So for our trading setup, we will now mostly have to rely on the 4 hourly and the hourly chart. And one thing to take note of is this falling ATR level. Now the ATR has gone down to 370 points from the high levels of even more than 1,000 points in the end of March. So here the volatility is reducing day by day, and as you can see from this price action which has been increasingly sideways, we have this sideways momentum now taking shape in the dollar index. So on the 4 hourly chart we have this price action which is showing that there is a strong resistance closer to the 28,000 zone for the Dow Jones Industrial Average, and that's why we can use this 28,000 zone as our decision marker, and we can also use this zone to figure out the stop loss levels in case we happen to be wrong. And on the lower side, if we see the price action, it has entered into the lower band of this regression curve, and it is likely to result in the flattening of this regression curve in coming session. Right now it is pointing to the higher side, and after this steep run on the higher side, that influence is still there, but as more and more time is spent by the Dow Jones Industrial Average below this central line, we will see it flattening to some extent, and then in such a scenario we can expect the Dow Jones Industrial Average to get closer to this first resistance line which is there around 27,200. And if that is going to be the case, we have to see where are the emerging opportunities for us. So here on the hourly chart, we have this formation of lower highs and lower lows, and even in today's session, as we can observe, we had this high being formed just at lower than this immediate swing high, the prior swing high, which is there around 27,900. Right now the price is closer to 27,750, and I would say that this is an opportunity for us to go for short sale trade, and as I said, the immediate swing high can be utilized for the stop loss setting level. So here we will keep the stop loss just little over this prior swing high, so a stop loss anywhere close to 27,950 to 28,000 should serve us well, and for an entry anywhere close to 27,800 or a little beyond that, closer to this resistance zone. So we will need to see first the consolidation for the dollar for the Dow Jones, and then if we don't really see a big break above this important resistance zone, we will have more reasons to feel optimistic about our trading setup, and in such a scenario we can think about going for short selling opportunities in the Dow Jones Industrial Average. And then on the lower side, the targets can be pretty much close to this immediate swing low which is there around 27,500. So here keep a watch on the price action of the Dow Jones Industrial Average, and if we see any opportunities arising in it, we can indeed try to exploit this situation. to our advantage. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument and one should be careful while using the information provided. Have a fabulous day and the weekend ahead. See you on Monday. Goodbye.